Once your bank account is shifted over to the Federal Reserve and you're buying and selling and transacting in Fed-derived dollars, they see everything you do. They know where you are, they know what you're buying, and because digital currencies are programmable, they have control over what you're buying. If they don't like how you're spending your money, they can stop you from doing that. If they don't like your political activities, they can flat out take money out of your bank account, which Canada already did just lately, by the way, with old style bank accounts. They froze people's bank accounts and emptied them out. Well, with a central bank digital currency, it's going to be that much easier to do that. So this is about control, and we ought to be fighting this to the extent that we can, hard, because this is almost the last piece of the puzzle for the totalitarian states that a lot of people in charge right now would love to be able to set up.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for November 29th through December 6th, 2022, while supplies last. This week we feature pre-1933 gold in the form of $20 Liberty and $20 St. Gaudens coins. Prompted by the discovery of gold in California, starting in 1850, the U.S. Mint began issuing $20 Double Eagle Liberties, with 0.9675 troy ounces of fine gold per coin. In 1907, President Teddy Roosevelt issued a new design from the famous sculptor Augustus St. Gaudens. These St. Gaudens Double Eagles were minted until 1933. Both the Liberty and the St. Gaudens designs are prized for their recognizability, their historical significance, and their tradition as a secure store of value. We have coins available from the XF, AU, and BU grades through the numeric grades MS61 to MS65, which are certified by NGC or PCGS. As they range in grade, they range in premium. But call us for an up-to-the-minute quote at prices we believe no one else comes close to, and take this opportunity to own a piece of history today. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Finally, one last announcement about weekends. While we've been posting new content 7 days a week, we will soon be shifting to posting every day Monday through Saturday, and taking Sundays for rest, religion, and relationships. We'll still be available for orders, but our postings will resume on Mondays.
Welcome back to Liberty and Finance. We're always glad to get this returning guest. John Rubino is the former founder of $dollarcollapse.com. He's also author of several books about the end of our financial regime. He speaks widely to audiences on this topic, and he's here with us again this Wednesday, November 30th, 2022. John, thanks for coming back on Liberty and Finance.
Hey, Dunnigan. Good to talk to you again.
It's been a while since you and I were here personally together. Glad to have you back in this way. And there's so much to talk about. We're going to have to be a bit selective in our topics because the drumbeat of unprecedented and horrible things. I remember when I met you in person at the Liberty Mastermind Symposium, I believe it was Dallas, Texas, and you were on the stage there talking about how there's a myriad of things that could go wrong, and any one of them could start a chain reaction that bring the whole house of cards down. There's certainly been a lot of chewing gum and glue and bungee cords that have been used since then to try to keep the house of cards intact as much as possible, but there's signs now that your latest research is unearthing of a dramatic and drastic slowdowns in the U.S. economy. Can you talk to us about what we know?
We're in kind of a regime change now, where the past year has been kind of an inflationary boom. Too fast growth, too quickly rising prices, and now that's all starting to reverse. The most recent stat is the Chicago Purchasing Managers Index, which is a measure of industrial activity in the Midwest, and it tanked. It was expected to be bad. It was much worse in reality, and it's at the worst level since the pandemic started. Which was we had a really short, sharp recession then, and it's that bad right now. So that, along with a whole bunch of other stats like housing tanking and mass layoffs in the tech sector, those things all point towards a dramatically slowing economy. which is going to take inflation off the table as a serious concern. It's completely possible that by this time next year, we're worried about deflation, which means there are going to be a lot of changes in the government's response to what's going on in the world.
That's been so bewildering to most people. Most people have been feeling the loss of purchasing power over decades, and especially the last several years, just like a hockey stick in the last 2 years. If there's a shift, as you call it, a regime change from an inflationary to a deflationary environment, can you walk us through maybe some major impacts, how people will see this hitting them, and where they need to position themselves to be ahead of that?
Well, it depends on what it is that goes down in price. Some things will continue to go up, like food is, that's a supply chain issue. Food prices are going to be tight for quite a while. And maybe natural gas, because that's another supply chain issue. But, oil is down lately, and house prices are falling and car prices are falling. So your sense of what's happening to your own lifestyle is going to depend on what you're trying to buy at any given time. Food will still be expensive, but it might be cheaper to put gas in the car. If you're trying to sell a house, then you're going to feel deflation really severely, because the price that you're going to be able to get for your house is going to go down dramatically. So it's going to be messy. But on balance, it's not going to feel like an across-the-board inflationary boom anymore. It's going to feel like an economy tipping into recession, with a lot of things getting cheaper. But it's not going to be pleasant, because yes, you're a consumer, and maybe you're not paying as much to live anymore, but your job is going to be a lot less secure, and the rest of your family will be the same way. So life will get a lot harder. And the bottom line to all this is that the central bank tightening that we're seeing right now is going to be reversed out pretty dramatically at some point. So the pivot that everybody's looking for, we already heard a little bit of that today, by the way. This is Wednesday, and the chairman of the Fed gave a talk in which he predicted smaller rate increases going forward. So that's the first step. The one after that is a cessation of rate increases, and then rate cuts, and then we'll be back in the familiar world of extremely easy money, or easier money, with the Fed leading the way. So the next year will be a huge change, but it's going to be a very scary time, because it's not clear that the global economy, as leveraged as it is, can handle another garden variety recession. It might turn into something much worse, just because so many leveraged players are going to blow up out there. And we can go through some of the likely suspects if you want.
Well, that's one of the concerns that a lot of our clients have, is that they're calling and saying they're not comfortable with the stability of the banking system. We've certainly had people such as Alistair MacLeod, whom you know well, talking about the leverage position of many of the banks, and the fragility and the low book to asset value ratio of a lot of those banks versus the market price. And it seems to indicate a fragility in the banking system in general that has some worst case spots where there might be the first dominoes to fall. Can you talk to us about where the real trouble spots appear to be?
Yeah, I'd be paying attention to Credit Suisse right now. It's a big European bank that is just on the verge of imploding. Its stock price has tanked. It's trying to raise new capital at this incredibly low valuation, which is a sign of a company in serious trouble, because nobody in their right mind would raise capital when they're trading at a fraction of their book value. And their credit default swaps on their bonds are becoming more and more expensive now, which is a sign that the market is worried about a default. So let's say Credit Suisse implodes in the next few months. What does that do? Well, everybody starts looking for the next one. And Deutsche Bank is the obvious next candidate. And, these are big financial institutions. You let those two get into trouble, and that's kind of a Lehman moment, or a potential Lehman moment. In other words, are we going to let these gigantic institutions go bust with all the other dominoes that would fall afterwards? Because that might be the thing that starts a cascade failure of the financial system. Or do we bail them out at the cost of the creation of hundreds of billions or maybe trillions of new euros? And dollars, because the Fed will chip in for sure. with which risks tanking the currencies of the countries doing the bailouts. So we get into a very dicey period there where every decision carries huge risks and nobody knows what to do for sure. That's a recipe for risk off in the financial markets. Everybody's going to be worried because they don't know what's going to happen. So they pull in their horns. They lower risk as much as possible, which is to say they sell the riskier assets on their balance sheets. So you get the potential for some very serious knock-on effects if something like Credit Suisse actually does implode. And it looks like it's going to here.
Well, as long as you're mentioning Deutsche Bank as well, people have been saying for a long time, for years, that Germany is the engine, the powerhouse of the European economy. So for the whole Eurozone, Germany's been the little engine that could to keep pulling it up the hill, despite the drag from countries like, some of the Mediterranean countries, Italy, Spain, Greece, etc. And what's your view, since you're mentioning recession coming, of the status of Germany in particular, or Europe in a broader sense, participating in this recession that you see ahead?
Well, yeah, the reason the Eurozone has been able to hang together as an economic and financial entity is because if you're buying, say, Italian bonds, you're not betting on Italy. You're assuming that the European Central Bank will back up Italian bonds, and you're assuming that Germany backs up the ECB, right? So basically, you're buying German bonds when you buy Italian bonds. That's basically the only thing that's allowed a lot of the weaker Eurozone countries to continue to exist in their current forms, because they're borrowing huge amounts of money, but nobody would lend to them unless Germany was ultimately backing them up. Now, Germany has screwed up their energy system so completely that it's not clear that they're a completely viable economy anymore, because they're a manufacturing powerhouse, but the way they manufacture is basically to import cheap natural gas and turn that natural gas into products. Now, I'm oversimplifying, but only by a little bit, and because they contracted for a huge amount of natural gas from Russia and then proceeded to antagonize Russia into cutting off those supplies. I'm also oversimplifying here, but the gist of it is true. It's not clear that Germany's industrial base is still functional. So the next couple of years, they may not be the industrial powerhouse that we expected, which means not just a recession in Europe, it means the deindustrialization of Europe, which is a whole different animal and potentially a lot more dangerous financially. So that's what they're looking at, and we'll see how winter goes. So far, they've had a relatively warm winter, which has bought them a little bit of time, but it's not clear they're going to have enough natural gas to keep factories running and keep homes heated. And if not this year, next year is going to be the decision point. So, Europe is in a mess on a lot of different levels, and it's not clear how they get out of this mess.
Sometimes we have a natural normalcy bias where people say, well, there's a few banks here and there, some of these far overseas ones that we never actually interact with on a day-to-day basis. So if they go bust, they'll have a problem over in their neck of the woods. Can you talk to us more about that domino effect and how realistic you believe it will be if something like a Credit Suisse bank failure were to happen, and if it were to then impact Deutsche Bank and so on? Why should the average mom and pop Main Street American care?
Well, the world is so financially intertwined right now that you really can't have a problem that's just in one place. It spreads to all the others. The world is full of hedge funds, which I'm including the big U.S. banks in the category of hedge funds, where they have bets placed on normalcy, as you said, all around the world. And any deviation from normalcy doesn't just threaten the place where it's happening. It threatens all the other leveraged bets that have been placed by all the other entities all around the world. So, for Deutsche Bank and Credit Suisse to run into trouble would be a big problem for Goldman Sachs and JP Morgan Chase. And so then it's here, and we will feel the effects of that. So, it's not clear that that we are safe from basically anything. I mean, you look what's happening in China right now, where they've got a zero COVID policy, which is basically a dictatorship's response to a pandemic, where they're locking down entire cities. Well, that's not just a Chinese problem; that's a U.S. problem, because they're the source of a lot of products that we depend on. And let them lock down, let them have civil unrest that leads to regime change, or even just a nasty recession over there, the shutdown of parts of their manufacturing base. And we feel the effects. So it really almost doesn't matter where it starts. We're set up for a financial and industrial contagion that will sweep across the world in the not too distant future. Just because we've made so many horrendous mistakes leading up to it. We keep leveraging ourselves to greater and greater extents in order to make money. Originally, it was with very low interest rates. You had to use leverage to make any kind of money when interest rates were zero or negative, but you could do that because money was so available and so cheap. Now take that cheap money away, and there are myriad entities out there that can't function in the current environment. And it's just a question of who blows up first. We're talking about Credit Suisse, but it could be any number of several hundred name brand companies out there that could blow up on us and start the whole thing rolling downhill.
You mentioned just now about the interconnectedness financially, but I think you also were implying that we've also made the decisions over the last several decades. It's been more than several decades that this whole thing about just-in-time, global outsourcing, offshoring, that sort of thing has happened, where we move manufacturing or whatever business processes it is to the place where it can supposedly be done at the lowest cost or the most efficiency, that sort of thing. It seems, can you talk to us about the economic realities as you try to execute on just making things that people need to live in an environment where this has been distributed over the entire world without it becoming a global contagion if anything goes wrong anywhere?
Yeah, this is a good illustration of the baffling stupidity of the people who are in charge of the world right now. Because, over the last 3 or so decades, we set up a globalized manufacturing and financial system where, you mine something in one country, you ship it to some other country for processing, to another country for assembly, and then it's sold in a fourth country. We have supply chains like that all over the world for all kinds of different crucial industrial components and finished products. So we set this up, and it works beautifully as long as the financial and industrial system of the world operates peacefully. So we get this set up, and then we pick fights with everybody in the world. We threaten to kick them out of the global financial system or out of their supply chains without realizing that they're crucial players in those things. We kick them out, and the supply chains no longer work. So that's what's happening now with the trade war with China and with the war in Ukraine, both of which the people in charge of the global financial system could have prevented, and instead they caused. So now the supply chains don't work anymore, which means whatever it is you make and sell, you're having trouble getting at least one thing that goes into it. And the world has responded to that by what they call onshoring. They're bringing back manufacturing capacity, at least for crucial products and components. They're bringing that back home, which is incredibly disruptive. It's really expensive to shift from one global trade regime to another. And the one we're shifting to is inherently more expensive because most countries don't have all they need to be able to make the things that they depend on. So they've got to figure out, if you can't source your components and your raw materials globally, how do you do this? How do you bring manufacturing back home when all the stuff that you need for manufacturing isn't made here? Yeah, well, you've got to kind of make everything. And that's a really expensive process. So we're embedding higher prices, in other words, an inflationary regime, into the global economy for the foreseeable future. It's going to be decades before we get this thing straightened out. And it was all preventable. It didn't have to happen. It was just the guys making decisions, especially in the US, but also in Europe and China and Russia, kind of not really seeming to understand what it was they were playing with. And now they're reaping the rewards of their ignorance and their impulsiveness. And it doesn't look like we can put the old globalized systems back together. So we're going in the direction that we're going, but it's going to be a really expensive, disruptive direction, even assuming we avoid crazy geopolitical things like a war or something like that, which is, statistically unusual for the human race. We're usually at war somewhere, somehow. And if we get into, say, a shooting war with Russia over Ukraine, forget what I just said, because it won't matter how the supply chains are set up, because we'll have bigger problems. But avoiding a nuclear war will still have huge problems transitioning from one manufacturing and trade regime to another. That's going to cause us trouble for decades to come.
What you've just described is an example of what I was talking about that's bewildering to so many ordinary people, because when we would get told by one set of experts, inflation is much more than you're being told, and it's going to persist much longer than we're being told, and the only way that the central banks typically try to manage this sort of thing is by flooding more currency to try to just drown out the problem with liquidity, and so all of that's inflationary, and all these crisis responses are inflationary and everything. And then you got the other side saying, yeah, but the faltering economy and the recessions and the plunging housing market and dropping prices, and now you're even talking about trying to put back together a more localized or nationalized rather than globalized supply chain is very expensive. That gets you more pressures on the inflationary side. So there just seem to be these Herculean forces, opposing but happening simultaneously. So for people to have any clear sense of which way we're going to shift in general seems to be just so difficult for the ordinary person to foresee and know, well, based on that, let me do this with my nest egg, or let me do this with my fact that I own a home or want to buy a home, or that sort of thing. How's the ordinary person supposed to make any sense of these titanic forces that seem to be pushing us in multiple directions at once?
Yeah, well, the world we're describing is characterized by chaos, basically. There's really no way to predict exactly how any of this is going to play out, because there are so many moving parts, so many crazy crises that could happen anywhere out of the blue overnight while we're sleeping. So you respond to chaos by becoming risk averse, basically. Because you can't predict what's going to happen. You don't want to take chances. And so the way you do that in this world is to shift your finances out of financial assets, because that's really where the chaos is going to take place, and into real things. So you want to own some farmland if you can, or a little homestead. That's the lifestyle of choice now, right? In America, everybody wants a homestead. And there's a reason for that, because a property that is a little bit isolated and produces food is inherently less risky than, say, a condo in the middle of a big city or a big suburban house. So people are already getting this. And the demand for instance, silver coins is through the roof lately because of that, because people are starting to think that maybe they want to de-risk their financial lives. And that means get out of dollars and government bonds and tech stocks and things like that, and into maybe precious metals, which are older forms of money which governments can't create in infinite quantities, and therefore which will probably go up in value as these fiat currencies crash in value. So there are things you can do, but they're not the things that you've been told you should be doing by financial planners and by the talking heads you see on CNBC and places like that. It requires people to start thinking outside of the box that they've been in intellectually for a long time, and start doing the things that are the opposite of what have worked for the past 70 years. So, it's not easy. It's not easy for a person who doesn't obsess about this stuff and form really strong opinions because they spend so much time looking at all this stuff to really make sense of it all. So hopefully people will conclude from that they want to be risk averse. And if they start doing things, paying off debt is another thing that you really should be doing in this world. So if they start doing things like that, they'll be moving in the direction of sustainability and being able to survive the stuff that's coming.
One of the things that we've been talking about more and more often is, as you talk about people wanting to own their own homestead so that they have something real and tangible, you just mentioned now about de-risking your financial life by not taking on excess debt and paying off the debt that you do have. What about property taxes? Can we touch briefly on that? Because that's been a strange phenomenon. People have talked about being taxed off their land or taxed out of their home, that sort of thing. Do we really own our homes and our ranches and our homesteads or whatever if you stop paying continually on those every year for property tax? Then eventually the sheriff comes and invites you to move out. So is there a way to de-risk that part of your life? I mean, do you recommend people prepaying their taxes ahead so they can't be told they're in delinquency or something like that? Is there any way to address the idea of how do you reconcile private property rights with the fact that you're still having to be continually paying to stay?
Yeah, that is kind of the catch-22 of the real estate market in an inflationary world. I mean, you buy property because it's something that might go up in an inflationary environment as the currency goes down, but so do your taxes. So the expense of holding this appreciating property rises, at least that part of the expense of it. Until for some people it becomes prohibitive and they can't pay their taxes. So they're faced with having to sell or default. And that's a disaster. And there's no real solution for that because there is no environment, no conceivable world in which there aren't property taxes. And if there aren't property taxes, there's going to be some other kind of tax because government has to be financed in some way. What we can work for is a smaller government that sticks to constitutional principles and therefore doesn't take a lot of money from its citizens. But there will always be a government, and it will always have to finance itself. And real estate is one really obvious way for state and local governments especially. So yeah, that's an expense you kind of have to build into your budgeting no matter what. And there really is no solution. If you want to own property, if you want your homestead or a good rental house, both of which ought to get more valuable in an inflationary world, you're going to have to pay taxes on them. And I just do not have a solution for that, except to say, build the tax environment of your real estate into your purchase calculation. If it's a high tax place where they have a history of raising taxes even faster than the cost of living, then that's a big red flag, and you should look for other places that don't do that.
We've heard a couple of things. One was outside the U.S., one was inside the U.S. Outside the U.S., we were on a vacation to Jamaica. This was years ago, and we noticed as we drove by on a bus tour that so many of the buildings appeared unfinished. There was rebar sticking out of the tops of the walls all around us as we drove past them. Even ones that looked quite expensive or whatever, they looked unfinished. And we asked the tour guide about that, and she said, "Well, you need to understand that in Jamaica, you don't start having to pay taxes on your improvements to your property until your project is complete." So you can imagine why these are all look incomplete. The other was in the U.S., the idea that sometimes you can get your property rezoned agricultural. If you're kind of on the edge of a urban to suburban transition and you have enough space to actually raise sheep or lambs or something or on your property, that you can say, look, I've got this many acres and I'm raising livestock and I want this rezoned agricultural. Sometimes you can save 80-90% on your property taxes that way rather than paying residential property taxes. A couple we've known of that have done that. So it's worth checking into in your area, depending whether that's even feasible or viable, depending where your location is. The other thing you were talking about, John, was de-risking your financial life and looking at the banking system and the potential domino effect of Credit Suisse, et cetera, that could spread a contagion, that sort of thing. We just heard in the past couple weeks about trial runs of a central bank digital currency in the U.S. With at several major banks doing this trial run. Can you let us know what you think the significance is of a central bank digital currency coming to a country near you, and what you think people need to be aware of so that they can prepare for that?
Yeah, well, I think central bank digital currencies are they're more of a political issue than a financial issue. In other words, we don't really need them or anything from a financial standpoint because it's already pretty easy to use a credit card and, pay off your bank balances or whatever charges you have to pay off to a bank online. It's easy to do. But central banks and the governments that run the central banks would like to get rid of the last vestiges of financial privacy that we enjoy because that gives them more control over people. So once your bank account is shifted over to the Federal Reserve and you're buying and selling and transacting in Fed-derived dollars, they see everything you do. They know where you are, they know what you're buying, and because digital currencies are programmable, they have control over what you're buying. If they don't like how you're spending your money, they can stop you from doing that. If they don't like your political activities, they can flat out take money out of your bank account, which Canada already did just lately, by the way, with old style bank accounts. They froze people's bank accounts and emptied them out. Well, with a central bank digital currency, it's going to be that much easier to do that. So this is about control, and we ought to be fighting this to the extent that we can, hard, because this is almost the last piece of the puzzle for the totalitarian states that a lot of people in charge right now would love to be able to set up. Look what's happening in China. If you don't, you have to scan your personal social credit score code into a scanner before you're allowed to do a lot of things, before you're allowed to enter and leave certain places or travel or buy certain things. So that's a glimpse of the future. And I think we should all be paying attention to it and all be trying to do things to avoid that. And, you do it by holding cash. To the extent that we're allowed to, we should all keep and transact in cash because that's a private activity. It's the last vestige of our financial privacy. At some point, there's going to be a black market in precious metals, for instance, where you can use silver and gold coins to do a lot of transactions. So I think that's another reason to be stacking right now, to have as much gold and silver easily available as possible, because the time will come when you go to the farmer's market with a silver eagle, let's say, and the farmers there, knowing exactly how finance works by that time, are going to, they'll happily take your silver eagle for fruits and vegetables. And that's another private transaction. So, we still have some ways of fighting back, but it's going to be an uphill battle because these guys they're very serious about central bank digital currencies and they're serious about control. And so, every generation has its battles to fight. And I think our kids' fight is going to be in favor of privacy and against these emerging dictatorships. So, and it's not going to be an easy fight, but there's really no choice. We fight or we give up and become complete slaves instead of just the partial debt slaves that we are right now. So, crazy financial times coming and equally crazy political times coming for our kids, unfortunately.
You made me remember when my recent engineering career about a decade ago had travels to Eastern Germany, and the culture there, having been under the influence of socialism through East German government and through influenced by Russia for several decades, was one of intense distrust of the government. And in that kind of an environment, it was almost entirely a cash-based economy. When you went as a visitor thinking, I'll just use my Visa card to, fill in the blank, rent get a car ride or pay at a restaurant or buy something at a shop, and then you get told cash only, cash only, cash only. We very quickly ran out of cash early in our business trip and had to go to the bank and pay some exorbitant exchange rate to get more local euros. The point is that the individuals operating in that economy had made the decision based on their distrust of government to go cash only, and the vast majority of businesses were operating that way. I don't know what happens, and that's what some clients are asking, is what happens when we get told by officialdom that because of criminal activity there will be no more cash transactions or hand-to-hand barter, silver gold transactions, that sort of thing. Do you foresee from history that the human spirit just says, well, we're going to do our business the way we see fit, and that people will just work around such edicts? Or do you see us on the whole caving and going with only transacting the central bank digital currency for fear of repercussions being reported, whatever, if we try to transact with private natural means?
Well, I think a lot of people will fight back, and history shows that sometimes the good guys win, sometimes the good guys lose. So the outcome is not guaranteed. But I got to say, the recent pandemic experience makes me a little more pessimistic. It was very easy to control people over the last couple of years, and if that big a portion of the population is that easily controlled, then we're kind of ripe for the picking right now. So, the relative handful of people who are libertarian-ish and individualistic, I think we'll fight back and we'll do what we can to maintain financial privacy. It's going to be a battle, though, and I don't think the outcome is in any way guaranteed one way or the other.
John, you've you're no longer managing dollarcollapse.com, but you're still speaking fairly widely. If people want to make sure that they pick up on your latest both writing and speaking, how should they follow you?
Well, I'm doing shows like yours, but not doing any writing right now. But I'm thinking about starting a Substack page that will allow me to write about the things you and I talked about. So I'll let you know next time we talk whether that's up and running, and then there's a place people can go. But in the meantime, just watch this video, and that's all you need to do.
Well, John, we're certainly grateful every time we get your presence here with us on Liberty and Finance, and for this visit in particular. So on behalf of all of our viewers, thanks for joining us.
Thanks, Dunnigan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.